Well, folks, it hurts me to say this, but the market's likely going to get a whole lot worse. Let me tell you kind of what's happened the last few hours. So I did channel checks today. I made a YouTube video earlier today. And the last few hours I went off on the deep end. So essentially what that means is into mad research mode. Because I was just looking at the market today and I saw that sell-off and I was just like, fuck, like somebody's got to know something. Like something bigger is going on than everybody else is talking about. Everybody's talking about the Fed, the Fed, the Fed, the Fed. It's everywhere. Inflation, 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 inflation. And what I'm going to show you in this video actually has very little to do with the Fed and very little to do with inflation. And actually a way deeper problem we have right now that is much more serious than the Fed, inflation, or any of that. And this is I don't think I've put it together probably a more scary video than this in a long time. And we've got a lot to get into, guys. First off, I don't know if you guys saw Netflix. Netflix reported earnings, and we'll get into that in just a moment, but it's bad. And remember, that's a $200+ billion market cap, okay? Now, to catch everybody up real quick here, if you haven't been caught up on kind of what's happened in the market, the devastation, it started out, as far as the crash of these stocks, it started out with the super speculative companies, like the ones that were like pre-revenue type companies that were flying high in January of last year. Started out with those sorts of companies. Those started falling first. Then after that, it was the low growth money losing companies were the next to fall. After that, it was the high growth money losing companies, which several I own, several of those stocks I've been buying the past 6 months plus heavy, right? As they went down and down and down. And those were the next leg down. The companies like a Tattooed Chef, right? That isn't profitable on the bottom line yet. Or an Honest that's not profitable on the bottom line yet. Look what's happened to those stock prices. They've been devastated. The next up after that, the next group to fall after that was the growth companies that are already profitable. Think about companies like Square. Think about companies like PayPal and many various others. Those ones have fallen and fallen. Then, just very recently, it was the big banks. Goldman Sachs, JP Morgan, and the others. Those ones have started to fall, okay? And so group after group after group, and that's why I always tell you, I preach this all the time, like be very scared to laugh at other people. If other people are like getting hurt in the market, do not make fun of them because that can be you very, very shortly. And so as some of these stocks started to crash, all of a sudden we see all that's holding up left here is super cap tech in oil and gas. And do I have some scary stuff to show you in this video in regards to super cap tech in oil and gas? All right, let's get into this. So first thing we got to talk about is Netflix. So Netflix on the surface level reported some respectable numbers. EPS looked really healthy and good. Revenue came in line. Global paid net subscriber additions came in okay. But this is about the worst guidance you can ever imagine what just happened, okay? Netflix said it expects 2.5 million subscribers during the first quarter of 2022. Far below the 3.98 million it added in Q1 of 21. Meanwhile, analysts had expected 6.9 million. That has to be the worst guidance I've seen in my life. That is, for a big company that is a super tech, are you kidding me, guys? This is devastating to Netflix. When you are... I don't even know how to explain how bad of a miss that is. 2.5 mil versus 6.9 was expected. That is such a colossal miss. It's hard to even wrap your head around that. I've been doing this for a long time and I haven't seen many misses on a very important metric, which this is to Netflix shareholders. This is the most important metric. I haven't seen a miss that bad I don't know if ever, okay? Now, what I'm about to show you here, okay, let me just say, this is very confidential stuff I'm about to show you, okay, in terms of this next stuff. What I'm about to show you is YouTube ad rates. YouTube is owned by Google, if you didn't know, okay? And YouTube has been the growth engine of Google. And Google's in a very healthy spot when ad rates are going up and people are advertising like crazy and spending more money. And I've had I know all the biggest YouTube creators out there in terms of at least the finance niche and some other niches out there. And I've had discussions with all these various folks, and we've seen our ad rates pretty much fall off a cliff recently, okay? Now, I don't know if I'm allowed to show you guys the actual number, but I can show you the percentage drop. Playback-based CPM has fallen 35% on the main channel. 35%. Now, it is normal for December to January for the number to fall, but based upon the people I've talked to, it's not usually anywhere remotely close to that sort of number. That's an extraordinarily scary number, nonetheless. Okay, and this is across the board. Everybody I've talked to is down 25 to 35% across the board. On Financial Education 3, playback-based CPM is down 33%. Okay, now what does this mean essentially? Well, companies aren't advertising, okay, or certainly aren't advertising the way they were advertising, and clearly advertising budgets must be getting cut because you don't see CPMs go down like that unless advertising are getting cut. Okay, why would a company cut advertising? Well, if they're not getting the ROI and the revenue's not there, right? If people aren't buying those products and services, obviously they have to cut. And that's exactly what we've seen across the board on YouTube, okay? And this is extremely troubling for Google. Extremely troubling, okay? And essentially, next quarter, Google's expected to have revenue go up 19.5%. Well, with CPMs going down at that rapid of a clip, I'm not sure how in the world they beat that number, which because Google's stock price has been flying high, they're expected to destroy that number, okay? I'm not sure how they even hit that number. Never mind trying to come in and beat that or destroy that number. I'm not even sure how they're going to. I literally don't know. Like when CPMs are going down that fast, how do you hit that number? Like literally, like that is to me is like I don't see them hitting that. They're going to likely have to guide way lower. Next year, revenue is expected to go up 17%. I don't know how they hit those numbers, guys. I'll truly be honest. Like I don't see it. Unless things magically turn in their business model and CPMs go crazy, you can't have numbers down 30+% and somehow magically hit your numbers. That's not happening. So this is extremely troubling. And Google is a $1.76 trillion market cap. If this baby falls, it's a stack of dominoes. It's going to pull down the entire NASDAQ in a massive, massive way. And so these are the things that actually scare me in the market. You know, the Fed and all that crap, that doesn't scare me. What scares me ever in the market is if companies are missing their earnings. And if companies are consistently missing their earnings in something like a Google McDougal, oh boy, I think they're going to likely come in with weak guidance, very weak guidance. And when your stock's flying high, look at the chart of Google. Your stock could easily be cut in a massive, massive way because you also have to cut EPS numbers, revenue numbers, the next year numbers, and the next year numbers. And you get into this vicious kind of down cycle of analysts downgrading the stock. And it's not really about the last quarter. It's more about the future quarter in the future years, what's very worrying about. Oh, it gets so much worse. It gets so much worse than that, okay? Apple. Apple's a $2.68 trillion market cap. It's the biggest big dog you're going to find out there in the stock market. And Apple moves the entire market when it goes down. It moves the entire market when it goes up. And Apple moves the entire semiconductor industry. Apple's a $2.68 trillion company. And I'll be honest, I am very worried about Apple's 2022 numbers. As we always say, I at least always say this in the private stock group, and I probably say it on YouTube a lot, Google Trends is our friend. And what we're going to find is iPhone search term in the United States of America is about the lowest you will find in the past 5 years. 5 years. iPhone is Apple's cash cow. And if this shows you that there's likely weakness in iPhone, okay? And this shows you that there's just not many people that are like, typing into Google iPhone to go look at an iPhone review or go, buy an iPhone or things like that. Like if I'm going to go buy an iPhone, the first thing I do is I go to Google, I type in iPhone, Apple's page comes up, I click on it, I go order an iPhone. And the fact that numbers, the Google Trends is about the worst, is literally the worst you're going to find in the last 5 years. That's beyond troubling, okay? The search term Apple in the past 12 months is about the lowest it's been in the past 12 months. So that's not good. Look where, Apple was at this time last year versus where Apple's at now. And keep in mind, analysts expect Apple to have growth for the company in 22. And when I start to look at some of this, I'm like, how do they get growth? And if it's like this in the United States, imagine what it's like in other markets. It's likely even much worse, okay? And so I look at this and I'm like, how is Apple even going to grow? Is Apple going to grow revenues in 22? And I think that's a big, I don't know. And Apple's valuation, and I've spoke about this. I spoke about large cap valuations have been way above where they should be. I covered that 1,000 times the past 3 months. Okay, we go to Yardeni Research, we look at it. Large caps are trading way rich. And when you're trading way rich, and now I'm worried about you having potentially negative revenue growth, that's a whole situation there. iPad, if we go back the past 12 months, iPad is about the lowest we've seen in the past 12 months for Apple, okay? And so this is extremely troubling for Apple stock, which is extremely troubling for the entire stock market because of how heavy a weight Tesla, okay? If you're a super Tesla, fan that you can't ever, listen to any criticism, turn this video off now. Go watch, there's plenty of very bullish videos around Tesla, okay? What I'm not going to show you right now is not very bullish around Tesla, at least in the short term. What I'm going to show you is downright scary around Tesla, okay? Now, first thing is Elon Musk came out on Twitter, okay? And he said he expects a recession in the spring or summer of 22 or at the latest 23. Elon Musk, is he a smart man or is he an idiot? Probably a pretty smart dude, okay? Is Elon Musk connected with everybody that's everybody? Yes. Is Elon Musk the richest person in the world? Yes. Does Elon Musk probably know what he's talking about? Probably, okay? And for Elon Musk to say something like that, there's got to be something going on for him to go on Twitter, and because he's going to look like an idiot if there's no recession. Then everybody's going to be like, Elon Musk doesn't know what he's talking about. Sure, Elon Musk doesn't want to look like an idiot. There's got to be something a little deeper and a little scarier he's probably seeing in Tesla that is troubling, okay? And this is getting worse. Okay, Google Trends is our friend. Tesla Model 3 is the lowest it has been in the past year in terms of search volume. What this likely means is Tesla's going to their growth rates are going to, I don't want to say it's going to go negative, but I think they're going to have extreme trouble hitting growth rates starting in the middle of the year. And if interest rates rise, that's bad for autos. And when you're talking about your Google Trends is falling off a cliff like this, that's not good. And what you see is consistently Tesla Model 3, Tesla Model Y. These are all things you see. And if you're hoping China is going to bail these numbers out, they're only going to bail it out so much. That's all I'm going to say about that. They're only going to bail it out so much, and the Tesla numbers that are expected are astronomically high. Tesla Model Y is falling off a cliff in terms of search demand. And so we're looking at a situation where I think Elon Musk has been looking at the likely orders coming in and saying, we're going to be able to post up a next 1 to 2 good quarters because we have this backlog of demand, but we could end up running into a lot of trouble, especially hitting these growth rates, because you got to understand the growth rates Tesla's expected to hit this year are astronomically high. And the auto industry is cyclical, regardless if you're an EV company or an auto company. We're looking at Tesla likely not hitting any of their numbers in the middle of this year, okay? Google Trends is our friend. That's all I'm going to say about that. Google Trends is our friend. And Elon Musk, the guy, I think he knows a little bit about a little something. That's all I'm going to say about that, okay? Jay Powell, next talk here, okay? Everybody's pricing in 4 to 7 rate hikes from the Fed in 2022. I'm going to be the first person to say this. I will be shocked, and I mean utterly shocked, if they raise rates more than twice this year. And damn it, I'm going to be the first one to say it. I think there's a possibility that they could end up lowering rates in 22. And I know it's impossible to even wrap your head around right now. Everybody is so convinced there's 4 to 7 rate hikes coming this year in 22. And based upon what I'm seeing, I truly believe there's a possibility that we could see rate declines in 22. I would be shocked if we see rates go up any more than twice this year. And the reason being is if all the big tech and all the big companies start to report extremely troubling numbers, the next thing that starts to talk about is recession. And if you have the stock market dropping and dropping, it was okay when it was just the small caps. It was okay when it was just speculative companies, and it was okay when it was just high growth money losing companies. But it's not okay when all of a sudden it's the entire S&P 500 and the entire Dow and the entire NASDAQ. The NASDAQ's on pace to be we're on pace for the worst stock market in the history of the stock market for the month of January. That's when it becomes not okay. When it starts to hit everybody's 401k, when we get into a situation where everybody's wealth starts declining, then it becomes not okay. And when it starts to hit the baby boomers who are living off stocks and other things, when that starts to hit everybody, that's no longer okay. That's no longer okay. And the next thing you know, the Fed has to respond to that. And if the whole market's dropping like a rock, do you know what's next? Real estate. Okay? And if the whole market's dropping like a rock and we start having real true recession fears, and the biggest of the big companies are saying, "Hey man, things are deteriorating here," the Fed, they're not going to be able to raise. They'll end up going from a situation where they're like, "Oh yeah, we were going to raise, but now we're not going to raise," and then all of a sudden, you know what? I think we have to drop. And that is a whole other crazy situation that I can foresee coming, okay? Let's talk about Biden for a moment, all right? You guys know me, I don't get political on the channel. But damn, the media is going to have to. The media is going to have to start putting pressure on Biden. The media has kind of been non-existent. The media was always putting a lot of pressure on Trump all the time. Like if the stock market fell, oh, look at Trump's stock market. Oh, look at Trump's economy, it's falling. They put the pressure on Trump, and that made Trump into a situation where he had to try to do things to, have the economy be in a healthy place. If Biden's asleep here and the media is asleep, I'm telling you, this is going to get really, really ugly, really, really fast. The media has to, and I know a lot of times they don't want to because they want to look at this and say, well, we want to make sure he gets reelected in the next election. He's not getting reelected in the next election based upon his poll numbers and based upon if we have a crashing economy. There's no chance he's getting reelected in that sort of situation. So the only chance for him to get reelected is if the media starts to really put the pressure on him and he really gets in a serious situation where he's like, dude, as these big companies start to potentially guide down their numbers and they start to speak about troubles brewing in terms of demand for products and services they have, we're going to need action. We're going to need action from the Fed and we're going to need action from Biden. If they're asleep at the wheel, that's not going to bode well for the stock market, flat out. Okay, the media better start putting pressure. I'm telling you, it will get ugly in the actual underlying economy. Okay, so we have true problems in big tech, okay, that are going to start playing out over the next few months. Now, the next thing is if we see all big tech starting to report bad numbers, worrying growth rates, missing guidance, missing numbers, then the next step you have, and the Fed all of a sudden being in a situation where they can't raise rates, maybe have to lower, then you start having true recession fears. And if you start having true recession fears, guess what falls next? Oil and gas. Oil and gas. And guess what a lot of the largest cap stocks are in the stock market? oil and gas stocks, and that's been one of the few groups that has held up very, very well in this market, as we've seen 70% roughly of NASDAQ stocks go into bear market, as we've seen a record amount of NASDAQ stocks fall 50% plus. As we've seen all that play out, the big tech and the oil and gas have been holding this whole ship together, right? And floating us. Well, baby, I can tell you, if there's true recession fears that start brewing, we'll be in a really bad situation when it comes to oil prices, and it'll get ugly as far as that goes. Okay. Now, next question, I know it's a natural question, is people are going to ask, what about the Russell, man? You know, the Russell's been getting destroyed. Small cap stocks have been getting destroyed. If Apple falls, Google falls, and these stocks pull back 10, 20, 30%, what does that mean for the Russell? Okay. Okay, so one is mentally prepare yourself for more potential damage. Okay. What we've seen throughout time is if you get the whole market to pull back, you have to be ready for potentially more damage. Now, the one good thing is a lot of these stocks have already been damaged, and if they're looking for places to put money, the first stocks that start to come back are these stocks right in front of your face right here, okay? As those are the first stocks that start falling in a downtrending market, right? And the last group to fall is the big tech, the seen as safety stocks, oil and gas stocks. Those are the last to start falling. Guess what the first ones are to come back strongest, fastest? The Russell stocks. And so you could actually see potentially a situation play out where the big tech, oil and gas stocks are not in a good place. You know, hedge funds are flooding out money out of those. And you could actually see potentially a situation where money starts to roll in to a lot of the smaller cap stocks, because what's the first stocks that start to go up on the uptrend as you start coming out of this situation? It's those sorts of companies and those sorts of stocks. And what has held back a lot of those stocks is inflation fears and how inflation hits those companies. Well, baby, I can tell you that inflation is likely going to go bye-bye as the year goes on throughout 22. And so that whole fear starts to go away there. And a lot of these stocks have already been damaged so heavily. So I think you have to be prepared for more damage, but I don't think it's nearly as bad, because I think the thought process is from a lot of folks that maybe aren't very in tune with the market, they think this must be the last group to come back, when in reality, this is the first group of stocks that start to come back, and then everything starts to come back from there, as they are the first ones to drop as well. Okay, so that's kind of my thoughts on the Russell there. And in terms of my fears in the market, I never get scared about, and by the way, if you want some free stocks from Moomoo, which we all need some free stocks right now, check out pinned comment down there and get your free stocks while you still can, okay? They're giving out some free stocks, and make sure to subscribe to the channel. My fears in the stock market is never around going down in a position. My fear in the stock market is never around the Fed. My fear in the stock market is never around presidential elections. My fear in the stock market is never around what's going on in China or any of that drama. My fear in the stock market is always the economy and people spending money. And as long as I am confident that people are spending money and people are going to buy the iPhones and buy the stuff, I never get scared. But I can tell you what worries me is when I see a lot of this data that you're not going to start seeing until a quarter from now, or over the next, you might even start hearing about some of this in this earnings season, because these big tech companies are quick to react. And I don't think they want to disappoint as the year goes on. And I wouldn't be surprised if you start to hear some troubling stuff on these earnings calls that are about to happen. So I think, by the way, download the Hungry Bull app so you can listen to earnings call free of charge and in a super easy way. Okay, the Hungry Bull app, iOS and Android now. I'm telling you guys, that's what I'm worried about. And, that's what I'm worried about in this sort of market. That's where my fears are. Nothing else scares me except if people aren't buying the new iPhone and aren't spending on ads and doing all that sort of stuff, because that's just that's when you got real systemic problems, and it's going to take a while to kind of dig out of that mess, right? So, anyways, guys, much love as always. Hope you enjoyed this video. Hope you got some good value out of it. Yeah, I'll just leave it there. Peace.